So pretty much, right, daily buys here is very, very simple. Like I mentioned, we sweep out this external range of liquidity here. Sweep this external, go into this internal, that's the draw on liquidity, and then probably continue lower as we knew. So this would have been my draw on liquidity, or at least my manipulation here, right? If price didn't tap into this gap before 10 a.m., I would have been like, okay, let's trade into that daily gap. But you can clearly see at 2 a.m. we tap into that gap. So at this point, what becomes my drawn liquidity? We go from IRL to ERL, right? And understanding that price wants to continue lower, respecting this gap, because you can see that price wicks from this gap. I wonder if we have an SMT. Let's see. There's no SMTs here. I don't believe so. Let's check YM. And YM actually has an SMT. So there's a YM SMT with this high, which can be qualified as our SMT inside of that gap. And yeah, let me just go back to M and Q. And so we have an SMT at these highs, right, at 2 a.m., tapping into that internal gap and wicking back into the range. So that confirms, right, that this is the high of day likely, right, and price wants to continue lower. Let me actually also pull up this indicator here. And so at this point, my drawn liquidity will be, these lows here and seeking those lows. So we can go down to the 1 hour chart here as well, see if we get that change in the state delivery, which we do, by this hourly change in state. Now, honestly, you can trade a higher time frame structure just off of this. You have that SMT, you have an accumulation manipulation into that gap, that daily fair value gap, and then you get a 1 hour change in the state delivered with SMT. You could literally just limit order off of here and play this and target a 2R, and like this would literally be perfect. And honestly, this might be the best setup for the day just because of the opportunity it gets, right? And that's the thing about the AMD model, and the lower time frame model that I use, is that it can be applied to everything, right? Because if we align the daily fair value gaps, time frame, the structure is the 1 hour chart, right? So on the structure, we have a 1 hour SMT, 1 hour change in the steady delivery, and we also take the 1 hour, entry and trade off of it, right? We can play off that structure because we're reacting off of a daily gap. So honestly, this would probably be the perfect setup for the day, but we can just wait and see. We manipulate into that hourly gap internally, so I'll say this is probably the best setup for Monday, but let's just see if we do anything else. We tap into this 1 hour gap on, at 9 a.m. So at this point, I want to see if we get a significant closure probably below here, and we can look to enter. And yeah, let's see. It's as simple as that. 10 a.m. right here. Want to see if we have any SMT. We do have SMT with this high. Right, so SMT with this external high and that internal high here with that 1 hour gap. And so pretty much for me, this confirms this setup. Sorry about that. Keep it on MNQ. Seems like a simple day. I'd probably you can limit orders. You can do this. Me personally, I'd probably do some of this. And we target, this low or 2R. See how this plays out. Sell. SL at the high. I mean, this is very simple here, right? We're tapping into that 1 hour for value gap pre 10 a.m. So the manipulation here, we don't want price to continue higher, because at this point, if we are bearish and we are respecting internal, we would seek the external range of liquidity, right? And how does this pair up? This pairs up by, we saw that internal gap pre 10 a.m. So this is the swing point at 9:45, and we're expecting this 10 a.m. candle to be the dump, right? So yeah, I mean, let's see how the setup plays out. Honestly, this is A+ for me. If it comes and stops me out, which it doesn't, but that's why, a lot of people here would also go break even at the swing low, and you could target the swing low for a scalp and let your thing, you could have just waited for this tap in that 60 level here, and scalped it to the lows as well. But I took the market order in this case, and this is proof, right, where break evening your trades and cutting them early would have probably just gotten you break even here, right? But if you held it, that you got your two, you're up 2R on the week. That's what I'm trying to say, right? So me personally, I'd rather just let price set and forget and just let my edge play out. And this is a great example of it playing out, even though it is like it's not that clean. We accumulate, we manipulate. You'd expect price. Now you can say, oh, price opens up here. We barely leave any top wick. We accumulate, manipulate, then distribute it. Why don't we continue higher? It's because this is an SMT protected high. Um, Trading away from the high of day, right? Now, this is very, very important in understanding structure, right? So if we know this is a confirmed high of day, are we going to expect price to just, come sweep out these SMT protected highs? No, we're expecting price to target the opposing side of the range. We're also combining IRL to ERL concepts, going from IRL and then targeting this external range of liquidity because that's that daily external low, right? So honestly, this is picture perfect. And the reason you don't take a buy here is because of that higher time frame structure and understanding that higher time frame structure is king, right? So I mean, Monday A plus setup here. Those two A plus setups you could have entered off of. Great review, great day to trade. Me personally, I don't trade Mondays, but of course, occasionally you get days like this where they're absolutely A plus, and this is one of the examples. So this was Monday. Let's skip to Tuesday. Not bad at all. So we're up 2R on the week. 7 a.m., 8 a.m., 9 a.m. All right, so man, I can't even go on the daily chart without this happening. But of course, like if we didn't see that these equal lows were my draw on liquidity and this monthly external range of liquidity, I've been saying it all week, is my draw on liquidity. Just because, we are in the fourth cycle of the AMD. So let me just show you guys an example where price always accumulates, it manipulates, creates a high, and then comes back into the range. And we're in this part of the range because we're in Q4, right? As well as that yearly candles closing, right? And so for me, right, I called the low of the year and expected price to distribute heavily because think about it logically, right? All this liquidity appears in accumulation. We manipulate these lows and we have this significant candle back into the range. And the yearly candle, of course, is going to have an accumulation manipulation back into the range. And another thing, another secret thing is once you see the yearly candle, right? Look at this. We form this yearly order block that price wants to come back into, right? Does that make sense? If we close up here, of course, we're going to retest the SSD level, right? This propulsion block and then continue higher. So I was very, very confident that price is actually still bullish, and that's why I actually called the bottom of the year and bought so much, the freest like 40-50%. I think it was like 30 or 45% now of the year. So you got to use AMD on every time frame, but in this case here we can see that this external equal low is my draw on liquidity and price might tap into that. I don't think we caught an entry during this day, but see if we can. So first off, let's go to the hourly chart, see what price is doing. So yeah, I mean, let's check all the assets. We tap into this internal Monday night, external. We see previous day low. See what YM's doing. YM is dumping, leaves a devil's mark though. Creates SMT. YM is pretty weak here as well. So at this point, with hourly SMT, any internal SMT we could base off of? Is there anything here? Nope, no SMT at the highs. Check YM. YM has SMT with the 7 a.m. highs with NQ and ES, which is, can be qualified as an SMT here. I like this propulsion block as a 10 a.m. AMD target, where price comes back tapping into this area, or even any of these 15-minute for value gaps here. So 10 a.m. candle opens up. I think this day was just a dump. Right, we just dumped heavy. But we formed this nice 15-minute for value gap. Ideally, I'd want price to tap in this gap and then continue lower to the external lows. Man, I hate when it does that. Let me just mark this out. So yeah, we're so close to sweeping these lows, and at this point, I wouldn't have taken a trade here, and probably the best trade would be pre 9:30 or 10 a.m. Like it'd probably be this right here, where we, you know, create this SMT, come back into the range, and probably react off this 930 propulsion block or yeah, probably the 930 propulsion block with that SMT at the highs. Or do you have this SMT with YM? You enter off this propulsion block, keep your stop loss like this, and target this external low. That's probably going to be your best trade. And you have to think about it logically. Why would I not take a trade here? It's because my significant drawn liquidity for the day has been taken out. So I want to trade towards this, but if I don't get an opportunity and the 10 a.m. candle opens up literally, you know, 25 points away from it, and I don't get that, retracement back into the range, like I'm not going to take a trade. It doesn't make sense because price doesn't have a reason to go anywhere after that. You guys get what I mean, right? So if my significant drawn liquidity for the day has been taken out, I won't take a trade. And on this day, I did not take a trade. I just sat on my hands, didn't force anything, waited for my model. But because that, I think it got taken out before we could even retrace, or I think we might have retraced actually. See, I don't remember, but I don't think I took a trade on this day. Did we tap in that gap? No, we didn't even form it yet. I think I might have missed it then, but let's wait and see. What time is it? Oh yeah, I was waiting for that gap to be tapped into. Let's see, did I take an entry? So here, the thing is, this would be your entry right here. I remember this. I remember this now, right? I didn't take this personally because price was accumulating very, very, high back into the range. But especially because price also was not forming any SMT at the highs, I don't think, as if I remember. Was there an SMT? There were equal highs here, right? And I was expecting, price to maybe leave a failure swing because we didn't have news on that Tuesday. So I was hesitant on this, and especially because this change in this day delivery is just so close to that. But this would be the model here where, you get that change in the day delivery off that 15-minute for value gap. Let me check with YM. I don't remember checking with YM. Let's see. My apologies. YM did have an internal SMT. So, like, you could have taken this, and this is probably your 10 AM AMD model playing out here. I personally sat on my hands, which is, completely normal, right? Understanding your risk. But this trade, I do think it played out perfectly, where you keep your stop at that SMT protected high, target these lows, or of course, this external low, because that is our significant DOL. So this would probably be like the highest probability entry pre 10 a.m. off that 5-minute propulsion block. And this is your accumulation manipulation distribution back into the range. And I'm pretty sure it plays out. And then I think we reverse from here, right? So honestly, even Tuesday, you would have made 2R if you mechanically traded the model and understood drawn liquidity. I don't like, this is honestly not a bad setup at all. I honestly don't remember why I didn't take it, but like this played out pretty nicely. So you'd be up 4R on the week minimum, 2.5. I think it's honestly, what was the setup before? Let's just double check. But guys, Wednesday and Thursday were absolutely amazing. Yeah, I don't know where it went. But yeah, so let's go to the next day. So you're up about probably 5R on the week so far. It's honestly a great week, but let's skip forward. So that's Tuesday there. You guys understand the thesis behind it. We're targeting these equal relative lows as our drawn liquidity and seeing what price wants to do. So let's skip a little forward here. So let's take a look at the daily chart here. Man, the daily chart always gives it away. But I think, let's wait and see. So at this point, my daily drawn liquidity is still, or my monthly drawn liquidity is still that monthly low. But, it is a large way down. As you guys can clearly see, it's this low here. I've been saying that all in my pre-market analysis. If anybody watches this video on YouTube, if you want my pre-market analysis and, daily bias every single day, I post that in my Discord for free. So if you guys want to join, the link is going to be the first link in the bio, right? So let's get straight into it. We tap in an hourly gap. you'd obviously want price, see what price does here. This is 4 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m., and 9 a.m. Oh, that's the 10 a.m. Or no, that's 9 a.m. So yeah, at this point, right, we sweep out that daily external. We'd expect price to kind of push higher, which we do here. I took a trade here. I just don't remember, but oh, I remember now. Okay, yeah. So the thesis behind this was absolutely amazing. So pretty much on Wednesday, I was expecting price to go back into this internal range of liquidity. I think it was on ES. Yeah. So this gap here, I wanted price on ES to run up, right? And ES was a stronger asset here because we do have an SMT at these lows here. So an SMT, right, can offer a short-term retracement back into the internal range of liquidity, right? So on ES, my daily bias was seeing this, price come back into. So this was previous, or where was previous day high? I just wanted price to pretty much balance this 50% of this range and also tap in that 4 hour for value gap here on ES. So that was my drawn liquidity actually, but I didn't get offered an entry. So on NQ, I switched it over and did something very cool. So we have a small gap and we have this significant 4 hour high that I wanted price to sweep out, and that was my drawn liquidity. So, oops, I did not mean to do that. But the trade I took on this day was very simple, right? So I think we swept out this high on NQ and we wicked it off ES, right? And we tapped that 4 hour gap like I mentioned. And so the trade I took here today was looking for shorts back into the range Y. And honestly, this is probably one of like the best trades, but it's a little like complicated. But pretty much, if you look here before, in the first, it doesn't show here because it just skips forward. But in the first, like, where was it? Was it on NQ? There's an unmitigated 1 hour gap somewhere here. Let me just find it. But it was shorts back into that unmitigated gap. Was it a 15-minute gap? It was shorts back into the range after sweeping that high. So pretty much like, of course, like I mentioned, I wanted price to continue higher, and I pretty much just took the significant change in this. Or I think that was on Thursday actually, but I pretty much took a significant candle body closure. I think it was an inversion of this actually. Then I must have taken on MNQ. No, yeah. So I took this. This is what I remember. I took this. So pretty much I got a 5-minute change in this day delivery after sweeping out that high. The 10 candle opened up here. We barely have any manipulation at the high. So accumulation, manipulation, swept out that 4 hour high. ES did the daily objective, and I'm reacting off of that. So this was my trade for the day. I think, I don't honestly remember, but I do remember winning this. And I think we scalped this or something, but we targeted too low. And this was the AMD model because we barely have any manipulation here, and I want price to fill all this liquidity here. So that's what price did. And it was a very, very quick take profit. That's what I remember. But, Thursday was probably the most insane day. So that was the 10 a.m. AMD model playing out once again. So you're up about 7 or I'd say on the week. If you mechanically traded the AMD model, it was honestly a great week. But now stay tuned. Watch the next trade on ES. Now this is the trade I want to show you guys because it was absolutely crazy. So after seeing, so that's 6 p.m. So after seeing all this, right, I think this was news earnings of NVIDIA as well. We barely have any manipulation here. And we have a lot of LR. This is what I saw on ES. And of course, that external low here, that monthly low, is what's been on my mind the whole time because we left a failure swing to it on NQ, right? So I would not want price to reverse unless price sweeps out previous monthly low. So I was still very hesitant on longing off of here. So I waited. And oops. So this is the trade here, guys. This is the trade here. This is absolutely a masterpiece. So my daily bias, of course, up until this point was just a wait. It was very, very like confusing here. Is price going to reverse off this SMT at the daily lows, or is price going to come target those, those monthly lows, right? So at this point, from what I recall, I don't think there was any SMT, but NQ tapped into this hourly gap, right? NQ taps into this hourly gap. And what does price do here? So this is a very important concept. I want everybody watching this video and everybody in the live to understand that using IRL to ERL concepts is the best drawn liquidity. So in this point of time, the 9 a.m. candle does what? It leaves this 1 hour unmitigated gap, right? That I want price to go tap into, right? Unfortunately, it doesn't do that. And where does the candle open up? It opens up here. So this 4 hour candle is going to open up right here, right? Why is it not doing this? So it opens up right there. And so I was anticipating either an accumulation, manipulation, distribution. I take a long, right? Seeing how we react off this gap. This was my pivot point, pretty much. Like, this is the place I want price to tap into and see what happens. If we inverse it, then I'm going to take a short. If we react off this gap, I'm going to take a long, continuing in the trend. So at this point, what does price do? I'll show you guys what happens. So price opens up at 10 a.m., barely leaves any top wick, right? But guess what? We leave a failure swing to this gap here, creating relative equal lows and a lot of high resistance liquidity or low resistance liquidity we ran through. And there's no SMT at the lows, right? So once I saw these relative equal lows and all this liquidity resting here and saw this failure swing to this unmitigated gap, my bias became shorts, right? And the crazy thing is you'd expect price to continue here, but we didn't create any manipulation. The manipulation for the 10 a.m. candle isn't valid because we didn't engage into a higher time frame PD array, right? Now, this is some real sauce here. We didn't engage into any higher time frame PD array. So you can't say this is the low of that 4 hour candle if we don't engage into it. And I'm telling you guys, NQ did not engage into that gap either. And we don't have any SMT at that even that previous 9 a.m. candle's low, right? So this is a little advanced, but you can trade back into that internal range of liquidity, and that's what I exactly did. And I had the best entry possible. So price, what does price do? It sweeps out this previous 4 hour candle's high, and at that point, seeing this significant candle closure, what was it? Yeah, so it was this candle for me. On ES, I took this exact trade. I limit ordered off here, kept my stop loss even tighter than this, right? Because I'm not expecting price. I think it was literally above this gap. This was my breakaway gap, and I targeted 2R, right? Unfortunately, 2R, but I'm telling you, this was the most picture perfect trade on the planet. Look how clean my entry is, and look how much it runs for, right? Understanding IRL to ERL and understanding failure swings and understanding where the market actually wants to go, right, is going to make you catch trades like this. And just look at this. It just continues dumping. And guess what? On NQ, where does it go? Let's go see. Where does it go? To that monthly low. Right? And what drawn liquidity concept is that? It's a failure swing concept, right? Understanding that failure swings, right? If we fail to sweep out a significant drawn liquidity, that then becomes even stronger, right? To put into words, it becomes even stronger as a liquidity target because price is just engineering more liquidity above that area, right? Above that area. So if we left this here, that's more liquidity to run through to this failure swing, right? So failure swings are engineered liquidities, and we want to target those engineered liquidities, right? So at this point, I mean, wow, you're up 9R, 10R, 11R, and if you let it run, man, that's like, you take my entry, you let it run, you're up like 10R minimum, man. And so that was absolutely beautiful, and that's how I caught pretty much the best move of the month, or the largest move of the month with my AMD model, and that's absolutely perfect. And so to wrap it up, on Friday, unfortunately, I did take an L. It was OPEX, which is kind of like gives like pretty terrible price action, right? Pretty terrible price action, but the AMD model actually had a good setup that I kind of missed. But one of my mentorship students here, Jose, actually caught the perfect A+ setup here, which I'm going to show you guys. And a lot of my students actually caught this, where we accumulate, all right, this is the 10 AM, or this is 9 AM actually. So pretty much 9 AM is accumulating. We manipulate I don't know where I got stopped out, but we sweep out this previous, I think this 4 hour low. Oh no, I think we created an SMT here. Do we? No. I got off the charts early this day, but okay, so there's no SMT here. Maybe an internal. No internal. Did I just? Oh, so there's no internal SMT, but you can clearly see the 10 a.m. candle opens up here. We barely have any manipulation here. At this point, this would be your manipulation. So price dumps lower. And at this point, it just reverses. You have that 4 hour candle here, daily high. And you could also consider all this as LRLR and relative equal highs, with this being the daily high, like the so-called daily high right now, and all of this LRLR. Right, so this is all good liquidity targets, engineered liquidity. This is an engineered liquidity. This is an engineered liquidity. You guys can clearly see we don't sweep these out. We just keep leaving lower lows for price to run on the buy side of the market model, right? So at this point, I think a lot of my students, right, took this change in the state of delivery, and they pretty much just entered off of here, kept their stop loss at that low, and targeted, this and this, right? And so another reason, right, my bias actually for today was actually longing. I think I got stopped out actually. I took a long somewhere. I think it might have been this or something like that. I don't honestly remember, but I tried taking a long. It's I got induced early, but my drawn liquidity was actually higher for the daily candle or the weekly candle because, like I mentioned, every candle has 4 phases, right? Accumulation, manipulation, distribution, and then that close. And on the weekly candle, that Friday, right, that setup is called Thank God It's Friday, TGIF. That Friday is going to be trading back into the range. So because we dump so hard, especially on the weekly candle as well, you guys can clearly see, like this weekly candle, this is Monday. Like we dumped like how many points? Let's see this. Like 1,500 points, 600 points. You're gonna expect, especially on Friday, a rebound back into the range. Seeing this propulsion block and all that. So I had a bullish bias for the day, and seeing retracing back into the range because I'm following those, what's it called? Those power of 3 at AMD on the higher time frame as well. So this was a setup a lot of my students took. You almost got stopped out here, but of course, if you follow those, not taking break evens, letting your edge play out, which is the switch that I've made, and it's helped your expected value quite a bit, that statistical edge, you literally would have gone flawless on the week, up 13, 14R just trading my 10 a.m. AMD model. And these are literally the best setups for the day. And you can clearly see, right, everything makes sense here. We're trading the manipulation wicks, and we're understanding where to position ourselves relative to the markets. And I'm also teaching you my discretionary daily bias and how I use drawn liquidity very, very importantly. So that's pretty much the top 5 setups for the week and how I would have approached the week. It's been honestly a great week. I took a small L on Friday, but I was up, I think about 5R on the week. So that was honestly amazing. And yeah, absolutely perfect.